A 1031 exchange named after Section 1031 of the IRS Code allows you to sell one investment property and reinvest the profits into another investment property without immediately paying capital gains taxes. This isn't a tax loophole, it's a legitimate IRS-approved strategy used by savvy investors to build wealth while deferring taxes and keeping more of their money in play. So instead of giving a big chunk of your profits to the IRS, you keep rolling those gains forward into bigger, better properties. Now, before we go any further, I'm not a CPA, I'm not a real estate attorney, and I'm not a tax strategist. I'm here to educate, inform, and bring you strategies that could help you or your clients win in real estate. But please consult with a licensed professional to make sure a 1031 exchange is the right fit for your situation. So now you're probably thinking, what kind of properties qualify? To do a 1031 exchange, both the property you sell and the one you buy must be held for business or investment purposes. This includes rental properties, commercial buildings, land, industrial real estate, and even long-term flips, depending on the intent and timing. Now let's talk about what doesn't qualify. Your primary residence, short-term fix and flips, and most second homes, unless they meet the strict IRS guidelines. Also important, both properties must be like kind, which just means they're both real estate investments. You can trade land for a duplex or a warehouse for vacation rental. Like kind doesn't mean identical. But here's where things can go sideways if you're not prepared. There are two critical deadlines. You have 45 calendar days after the sale of your property to identify one or more potential replacement properties. And you have 180 calendar days from the sale to the close on the new property. You must also use a qualified intermediary or a QI. You can't touch the funds yourself. If you do, you trigger the tax bill and the exchange is disqualified. This is why it's important to plan your 1031 before you list the property, not after you go under contract.